All right, the debate over high-frequency trading continues, with investors battling over the importance of some traders being able to move quickly in and out of stocks. Also, some traders working in dark pools, which aren't necessarily viewable from other exchanges. Seth Merrin is the CEO of Liquidnet, one of the largest dark pools, stock markets effectively that operate off traditional exchanges. He joins us now with his perspective on high-frequency trading, speed trading, flash trading, and all of the above. Let's just start first with what Liquidnet does. You operate one of the first independent operators of a dark pool. You don't really deal in high-frequency trading or speed trading, the likes of which we've been reading about so much recently.
No, we don't. You know, our dark pool was created out of the problem that institutions have when they go and they trade stocks. Institutions, throughout the last 20 years, their assets have grown so large that every time they go into the market, they move the market. You have a simple supply and demand imbalance problem where the institution has 250,000 shares they want to buy, and what's available on the exchanges is only 200 shares. Clearly, that doesn't work. So we were created to provide a wholesale type market for the institutions so that they can trade anonymously and in the size that they need so that they don't move the market. Every movement of the market costs shareholders, the investors in the mutual funds and the pension funds, returns on their investment.
Nonetheless, a lot of retail investors, a lot of viewers of this show are concerned about this whole group of things that maybe people don't understand. One viewer writes, dark pools, high-frequency trading, on-site servers, flash trading, all the same thing, large money interests that are paying for an edge basically to beat out you and me. What do you say to that kind of concern?
Well, to lump everything together is just not accurate. There are good parts and there are bad parts to it. And dark pools just have a sinister-sounding name, and whoever invented that name should be shot.
It does sound pretty sinister.
But, you know, there are benefits. And when you talk about the benefits to the retail investor, it makes sense because every other industry has already understood the need to create a wholesale market, to supply the wholesalers, and let the retailers go to the retailers. But to mix the two, you cannot simply, you can't satisfy two very different constituencies with one common market, which is the exchange. So high-frequency trading is a whole separate category. Flash trading is a separate category of high-frequency trading, and there are lots of different dark pools. And now that it's coming into the news, it's very important to start differentiating between the types of dark pools, the types of high-frequency trading. It's not all bad.
Let me ask, though, you talk as well in your most recent note about some investors who are predatory. You say there have always been market participants that have earned their living exploiting the inefficiencies in the markets, profiting primarily at the expense of the institutions. Is that something people can use dark pools to do?
It depends, again, on the dark pool. We are very selective. Liquidnet's very selective as to who becomes a member. We are like a country club, and we simply admit those pension funds and mutual funds that have the same problem, and that is that they have to go out and they have to buy stock or sell large blocks of stock.
But because they're very large, right? I mean, people watching at home are going to say, hey, why can't I join this country club? And the fact is they're not selling 2 million shares of IBM.
Well, one of the things that we've done very well is, in fact, we created a better market structure. Today, you have an institution that has 250,000 shares, and they have to go to the exchanges to buy it at 200 shares a shot because that's all that's available. But what we did was we take that 200,000 shares of demand and we make it the supply, and then we invite everybody else to come in. So, in fact, the retailers can benefit because they come in, and certainly the 200,000 shares can absorb the 200 shares without moving the market. And, in fact, both sides get a better price. They get a midpoint execution. So there are ways that retail and wholesale can work together and should work together, and it's the same way that, you know, wholesalers and retailers work together in all of the other industries out there.
Just 30 seconds left, Seth. Let me ask you quickly. We have heard, nonetheless, calls for the banning of dark pools. NASDAQ CEO Bob Greifeld has called for a ban, and obviously America is hot right now for financial market regulation. Are you concerned that the regulators will go a little bit too far?
I am very concerned that the regulators are going to go too far, and I'm very concerned that a congressman can stand up and threaten the SEC in front of, you know, all the media and say, if you don't do this, then I will. Well, that is very much along the path of McCarthyism, and I think that we have an SEC for a purpose, and their purpose is to understand the changes in market structure because they change very quickly, excise the bad parts, and leave the good parts.
All right. Hey, Seth, thanks so much for joining us. Seth Merrin, CEO of Liquidnet.